Welcome to Nat Business Solutions YouTube channel. My name is Josh. I am the CEO of Nat Business Solutions, Tax Pro and EA with over 20 years of experience in income tax. And we're going to take a call. So I've got a caller on the line. Are you there?
Hey, Josh. Yep, I'm here. Thanks for having me on. I really appreciate the help. This is Mike Dawson, and I've got a bit of a tax headache I was hoping you could help me sort out.
Absolutely, Mike. Hey, man, tell me what's going on.
Sure thing. So here's the scoop. I got a letter from the IRS basically saying that my Handyman LLC, which I started with a buddy a couple of years ago, never filed a partnership return, and now they're hitting us with these monthly penalties. I honestly had no idea we were even supposed to file as a partnership, so I'm a little lost on what to do next.
Tell me a little bit about this partnership that you've got going.
Yeah, absolutely. So basically, it started out just as me and my buddy doing some handyman jobs around Tulsa. We formed an LLC just to keep things official and protect ourselves. When I applied for the EIN, I guess I must have checked the box that said we had two members, and that automatically put us in the partnership category. I didn't realize that meant we had to file a Form 1065 every year, so we never did. And now, here we are with penalties. It's a bit of a headache.
I gotcha. So what kind of penalty is on that notice?
Yeah, so the notice basically says that there's a monthly penalty for not filing the partnership return on time. It looks like it's about $220 per month per partner, and since it's been over a year, that's really added up. I think they're saying we owe a few $1,000s in penalties now, which is kind of overwhelming. So I'm just hoping there might be a way to fix this, or maybe even get some of that penalty waived.
I gotcha. And let me ask you one more question. Are you and your buddy still doing this partnership, or did y'all just do it 1 year and close?
Yeah, good question. Actually, we are still doing it, but it's been pretty small scale. We just do a handful of jobs each year, nothing huge. So we're still technically in the partnership, but we had no idea about the filing requirements. It just kind of slipped through the cracks.
I gotcha. So, Mike, here's what you can do. We can go back and file those partnership returns. Once you file them, then obviously this penalty will still stand, but you can report your income and your expenses. You're going to get a K-1 from that partnership. You'll need to amend your personal return. Once all that's done, then you could do a letter for 1 year for a first time abatement on that penalty. If you can do that, IRS may abate the penalty. And obviously, that's something I would recommend you hire a tax pro to kind of help you out with and guide you through, because it's a little bit tricky. But yeah, you'll file that 1065 for those couple of years. You're going to get a K-1. You'll report the net profit on your business, and then we would look at a first time abatement for one of the years of penalty. You'll probably have to pay the other year of penalty, but the good news is once you get current and you file on time, this goes away for the future.
Got it. That makes a lot of sense. So basically, we'll need to file those past due partnership returns, get the K-1 sorted out, amend my personal return if needed, and then try for that first time abatement on at least one of the year's penalties. I'll definitely get a tax pro to help out so I don't mess it up again, but it's good to know there's a path forward and that once we're caught up, we can avoid this in the future. Thanks so much for breaking it down for me.
Yeah, man. Thank you for calling, and I hope that this works out. Wish you and your partner all the best.
Absolutely. Thanks again, Josh. I really appreciate it.
Awesome. If you've got a question like this and you need help, you can reach out to our website, tax.pro, click on the contact, fill out the form, say that you're one of our YouTube subscribers, and we're happy to get your question answered.
You know why starting a handyman business is a great move? Because it's awesome. You get to work with your hands, solve real problems, and see the results right away. You're your own boss. You set the rates.
When squeaky, call me on the fly. I'll fix it up real speedy, or I'll at least give it a try. My hammer's got a hammer, my wrench is in a mood.
Welcome back to the Nat Business Solutions YouTube channel. I wanted to take a minute and kind of talk about handyman startups. So this comes up quite a bit. And let's say that you're thinking about starting a handyman service business.
Get off your butt and start your business today, not tomorrow, not next week,
And
today.
you're not sure what the best plan of action is or things that are going to be important. So I wanted to take a few minutes to talk to you about a few items you should know about before you start so that you can get your business set up in the right way and you're happy with that success. Okay? So number one, and this is an important one, but that's going to be to choose the right business structure.
The bread is warm, the road is long, but you must choose. then I shall choose and bear the cost.
People are going online, they're Googling this, they're looking for how to set up the proper structure. And they end up settling on forming an LLC. And I will tell you, unless, if we're doing a handyman business, probably that's not generally a super litigious business, meaning you're not probably going to get sued. Of course, you should always consult an attorney if you're concerned about that. But for tax purposes, which is what I'm going to talk about, you probably really don't need that LLC, that limited liability protection, for just a handyman startup. Okay. The only exception is if you had a significant amount of assets that were paid for, then you might want to make a change there. But otherwise, you're probably not in a situation where you're needing to set up an LLC. Instead, you can just start with pretty much a very basic sole proprietorship. And that's what I would tell you to start with. We're going to start with that sole proprietorship, and we're going to focus on our business growth. So in order to start that sole proprietorship, it's pretty simple. You might need to go file an assumed name certificate with your county or your local city. You'll take that assumed name certificate.
An assumed name certificate, sometimes called a DBA, is a simple form that lets you run your business under a name you choose without creating a whole new company.
And that's really all you need to go open a business account. You should be able to open that business account with your social. Some banks require a federal ID number. If you need that, you can go get one. But for the most part, on the sole prop, that's all you need is that assumed name certificate. You can go open the bank account and you're ready to go. Number two, this is going to be an important one as well, but that's going to be what I would tell you to track every expense.
Track every expense because it's deductible, right? Maybe, maybe not. NAP Business Solutions helps you know the difference and keeps it organized.
And what I mean by that is, seriously, track every expense. So literally, if you're forming the sole proprietor, you're going to get the assumed name. You're going to go, the first step is going to be to open that bank account. You're going to put a little bit of money in that account that's your money. You're going to label it as paid in capital so that everybody knows that's your money that you put in, okay? Then you're going to pay for those expenses out of that bank account, and we're going to track those. So it could be like tools and equipment, supplies. Supplies are generally defined as consumable items. It could be paint, screws, tape, that kind of thing. I would tell you then to also within this, we're going to want to track our vehicle expense, and this is not going to be tracked through your bank account. The important thing with vehicle is going to be mileage. So you're going to track those miles, okay? Use an app like MileIQ or something like that to help keep track of them. Advertisements. So this is going to be things like if you have a website, flyers, business cards, all of that kind of thing. Pay for your phone. And if you pay for your home, your internet at home, pay for those things out of that business account so it keeps track of those expenses. If you have branded work clothes, so let's say you design a graphic design logo and you put that on some shirts and you're going to wear those shirts, those are branded work clothes. We want to keep track of those. We can't just write off all of our clothing, but we could track those things. And then safety gear. So if you have specific items that are for safety, like goggles or gloves or maybe steel-toed boots that you're required to wear, those things we would want to keep track of. Of course, any further training after you've begun this business or any certifications or licenses, pay for those out of that business account. Business insurance, of course. And then if you have a home office, this is a space dedicated solely to business where maybe you're doing your invoicing or you're building your quotes, and that's a dedicated space, then we want to track the square footage of that. Number three, separate business and personal finances.
Easiest way to lose track of your money? Mixing it all together. Pay yourself first, keep receipts separate, and make tax time simple. Your business jar, your personal jar,
like I said before, you're going to open that business bank account. You're going to use the business debit card for business expenses. You're going to use the personal credit card for personal expenses. And then you're going to pay yourself from the business account. You can do that via a transfer. And with that transfer, you'll pay your personal bills. Now, I would also recommend that when you do that transfer, you set aside some money for income taxes. I would say start at 30% at least, okay? So if we move $1,000 from our business account that we have earned the money, clients have paid us, we're going to move that to our personal account via transfer, then I would recommend you have a personal savings account. You label that taxes, put 30% of that thousand, so $300 into that savings account, and that will help keep your taxes separate. So you're saving for that income tax bill throughout the year. You've got the $700 in the personal account where you're going to pay for those expenses. And then, of course, the business is only going to be for business expenses. The next thing I would tell you is keep track of, or while you're keeping track of those records, is to keep them organized. You could take photos of receipts because it's easy in the hustle and bustle to forget to get the receipt. So take a photo, and you could use something like Shoebox to hold those photos and organize them of those receipts. You can also just keep them on your camera roll, but make sure you keep up with them. Obviously, we want to keep copies of our bank statements, any invoices that you pay, things like that you want to hold on to. When you invoice a customer, you want to keep a copy of those invoices, and you can save those in something like Dropbox or something similar so that they don't get lost in a disaster. I've had clients that have had things lost in a fire, and all of their records were lost in that fire. And so it's very hard to rebuild after they've lost those records. That brings us to number 5, and that's going to be hire a professional for your bookkeeping. So as this business grows and expands, you're going to have less time to keep track of those expenses and to make sure that those are categorized properly. And that's when it's time to hire a professional. And you can hire a professional, and if you hire the right person, they're going to help teach you the basics of reading a balance sheet, a profit and loss, what a general ledger is. And you also, when you're looking for this person, you want to find somebody that's proactive in tax planning and in tax strategy. And so they're helping you to ensure that you're paying the lowest amount of tax that you can within this business. Okay. So those are the things that I would tell you. Once you grow to a point where it doesn't make sense for you because you're spending all of your time building the business or working in production in the business, hire a professional to come in and help you with your bookkeeping. So, and this can be a third party. They don't actually come into your office. They can be somebody that you are taking your records to, and they're doing that work for you.
Wrestling with your books, get a pro. Hire a professional bookkeeper. Hire Nap Business Solutions. They track every dollar, balance every account, and give you time to...
Thanks so much for taking the time to watch this. I'm excited for those new handyman businesses. If you have a specific handyman business question and you need help, hey, comment below or reach out to us. I look forward to serving you. And don't forget to hit that subscribe and like. Thanks for tuning in.
The power of full service payroll with Payority. What is full service payroll? It's the ultimate hassle-free solution for managing your business's payroll needs. With full service payroll, every aspect of payroll processing is handled for you, from calculating wages and taxes to filing compliance reports and ensuring timely payments. You get peace of mind while saving time and resources. Why Payority's full-service payroll stands out. Complete payroll management. We handle everything: wage calculations, tax withholdings, direct deposits, and more. Compliance made easy. Stay worry-free with expert handling of federal, state, and local tax regulations. Employee self-service. Empower your team with easy access to pay stubs and tax forms through our secure portal. Dedicated support. Our payroll experts are with you every step of the way, ensuring accuracy and reliability. Ready to simplify your payroll? Visit Payority.com to learn how our full-service payroll solutions can transform your business.
I wanted to take a minute just to talk to you briefly about the employee identification number. So, short or abbreviated, it's EIN. So the employee identification number is a unique 9-digit number that's issued by the IRS, or the Internal Revenue Service. It's used to identify a business entity for tax purposes. It's essentially like a social security number for your business. So what is it used for? Well, an EIN is required for several key business activities, including filing federal and state returns, opening a business bank account, hiring employees, applying for business licenses or permits, setting up payroll and paying employment taxes. These are all examples of things that you need that EIN or employee identification number for. Who needs an EIN? Well, you'll need an EIN if your business has employees, right? That one's key. If you operate as a corporation or a partnership, you're going to need an EIN. If you file employment, excise, or alcohol, tobacco, firearms, tax returns, and of course, you guessed it, you need an EIN. If you're withholding taxes on income, then you're going to need an EIN, like for payroll. If you're involved in certain types of trusts or estates or nonprofit organizations, those guys are going to need an EIN. And sometimes even sole proprietors need an EIN. They choose to get one, maybe they have employees, maybe they just want one to keep their social security number private and helps them appear a little bit more established. So how do you get an EIN? You can always go on irs.gov and apply. We see a lot of mistakes with the EIN applications, and it causes problems for people that apply incorrectly. Of course, you can always go on and do it yourself if you want. You can also reach out. My team does these all the time. It is not an expensive service that we do and we provide for you. If you are interested in having us help you, you can find out more visiting tax.pro and get with one of my solutions team members and they'll walk you through the next steps.
EIN is basically your business's social security number, except it doesn't need braces and it's only for taxes.
This question comes from John from South Dakota. And John asks, what income do I have to report? So this is a great question. And honestly, it's something that comes up more often than not. All income from whatever source derived is taxable, John, unless the law very specifically excludes that income. So I'm going to talk about what it includes. There are a few things it excludes. I'm not getting into that on this segment, but let me talk through what it includes. So all wages, salaries, tips, okay? Literally any kind of income that you receive that you have gain on is taxable income, all right? So all of those things, you're working for somebody and they're paying you wages, salaries, or tips. Those are all going to be taxable income.
See this? Wages, salary, even the tips from your cafe shifts, all taxable.
Figures.
But this right here?
What?
Us.
Self-employed income. What this could look like would be earnings for even as little as something as, you're going into business, you're picking up, do a pooper scooper business for the neighbors and they pay you 20, 40, 50, 60 bucks to do it. That is taxable income. It's self-employment income and it is taxable. Rental income. So if you rent out a bedroom, you're on Airbnb, you have a rental house, commercial rental, all of that stuff. Of course, we can take expenses against that kind of thing, but all of that is taxable income. Interest, dividends, those things from banks or credit unions, taxable. Capital gains. So let's say this could be anything from a coin collection. It could be Bitcoin. It could be stocks. It can be any kind of capital gain. So let's say you buy one share of Apple stock and then later you sell it and you've got a gain. That's taxable income. Let's say you get a collector's coin and you hold that and then you sell it and you have a gain. Then that is taxable income, the gain, of course. And then any of your side gig income. So this is like freelance income. Even if that's paid via cash or Venmo, it doesn't matter. All of that is going to be taxable income. So you want to track your income very specifically, and you want to report that on your tax return every single year. Definitely want to make sure that you're reporting your income, you're paying tax on that income, and you're keeping everything above board and correct with IRS. I hope this helps. If you've got a question like this, please feel free to reach out. You can do that from visiting our website, tax.pro. You can go to the contact us and drop me a line. You can also just call us. You can call me 806-576-3296. I'm happy, leave a voicemail with your question. I'm happy to answer that for you if I can. So, hey, thanks for tuning in. I really appreciate it. I wish you all the best. Have a great one. We'll talk soon. Thanks.
Listen to me. Stop guessing at your taxes. Stop losing sleep and hire a tax professional. No more do-it-yourself disasters. No more business